President Trump just saying a deal with Canada could be reached soon. Meantime, the U.S. trade deficit posting its biggest monthly increase in nearly 3.5 years. Our Steve Liesman joining us now with why that might be a good sign for growth. Those trade numbers today, Steve.
Yeah, Sarah, you know this. It's the opposite. The government reported the U.S. trade deficit surged in July 9.5%, and this now politically charged number hitting $50 billion. That's the largest number since February. Year to date, up 7% to $337 billion over the first 7 months of the year. But is it really a bad sign for the economy? The trade deficit, which is the excess of imports over exports, has been about constant as a percent of the economy for the past 8 years, and that's contrary to those who say it's getting worse. In fact, go back to '98. It only improves during recessions, and it worsens or gets larger when growth picks up almost all the time. That's because more inputs from abroad are needed when the economy grows, and more growth gives Americans more money to pay for imports. Looking at the trade deficit by country relative to the U.S. economy shows that Canada has a surplus if you take goods and services together, and the European Union and Mexican deficits both far more modest than China, where the trade deficit more than a point and a half of U.S. GDP. But again, all those deficits improve in recession, and they rise when the U.S. economy does better. But you can see right there the need for the president to focus on the Chinese deficit. He and his economic advisors, they have support among economists on Wall Street in their arguments against unfair Chinese trade practices, especially when it comes to technology. But they're practically alone in arguing that trade deficits are negative for the U.S. economy in and of themselves. In fact, many forecast bigger trade deficits, Sarah, if growth accelerates.
Quick question, Steve. Did you see anything in there, and I think a lot's being made of soybeans, but anything else in there that indicated that there was a rush to buy American or foreign products ahead of some of these tariffs going through?
Absolutely. What you had is you had a fall off in the U.S. food exports. And the reason is because you had a huge run up in soybean exports ahead of Chinese tariffs. A lot of the data in the prior months, and some of that data, by the way, flattered second quarter growth. That's going to go the other way, and trade now will probably be reducing U.S. growth in the weeks ahead. In other words, turn from a big positive to something more modest in the quarters ahead.